What is generational wealth? People tend to think of generational wealth as old money, but the potential to leave a financial legacy exists for anyone who generates more income than they spend. If you want financial independence for yourself, your children, your grandchildren, you need to start thinking strategically. December 17th, between 4 to 6 p.m., join us at the Columbia City Theater, kicking off a campaign to raising awareness to creating generational wealth. Generational wealth is family wealth passed down from one generation to the next, repeatedly. Want to learn more? Join us at the Columbia City Theater, December 17th, 4 to 6 p.m. to learn more about planting the seeds of generational wealth, what it means, and building your family dynasty. December 17th, 4 to 6 p.m. at the Columbia City Theater, sponsored in part by the City of Seattle Department of Neighborhoods and Rainier Avenue Radio World. Build your generational wealth.
What's going on, world? It's your boy OG Mambo
and your guy D Money. Join us along with Pint Size Patron and ID Yourself
here on Fresh Juice at Rainier Avenue Radio
every Wednesday hump day from 9 to 11 Pacific.
Get exclusive interviews from your favorite artists, all the hottest music, and updates on what we got going on in the world.
That's every Wednesday, 9 to 11 p.m. on Seattle's Rainier Avenue Radio.
Hello, my name is Pastor Derek Lane, and I live and pastor here in the Othello community. I'm vaccinated because I know how illness can hurt a community. As a grandfather, I am boosted to help protect my 3.5-year-old granddaughter who can't be. I don't want to see members of my community die needlessly. And as a pastor, I've had funerals for those who caught COVID, but none from taking the vaccine. If you have questions, need resources, or want to make an appointment, visit kingcounty.gov/vaccine.
You are listening to Rainier Avenue Radio .world. Don't forget to log on www.rainieravenue.world.
Welcome to Real Estate and Money, a half-hour program on Rainier Avenue Radio .world designed to help you whether you're a buyer, seller, investor, or renter in real estate. Your hosts are two local professionals who will escort you on your journey. Violeta Strash, who has years of media advertising and marketing experience and brings this extensive knowledge to John L. Scott Real Estate and all our clients. And Tina Lombard, who is a mortgage loan originator with guaranteed rate affinity, with over 28 years of experience. And now here's Violeta and Tina.
Hi.
Hello.
How's everyone? You? Where are you, Tina?
I'm home. I'm home with a background. It's snowing outside.
Oh, okay.
So.
That's cool.
Yeah, it's snowing outside, so I stayed home. I was out for half a day, and then my daughter called me up, and she said,
"Oh, wow."
Yes.
Oh, no. Yes. How much snow did you guys get?
We got about 2 or 3 inches. Then it starts snowing again, like where you couldn't see more than a half a mile in front of you.
And it's cold.
Yeah, it's probably about 40 degrees. It's about 40 degrees. It's a dry cold. But, it's kind of misleading because you get out there and you think the streets are clear, but then there's black ice and you just end up sliding.
Oh, yes.
So I'm like, I'm not doing that. I got enough food in my refrigerator. I'm going to, just bunker in.
Yes. Well, it's in the 40s here, but it's wet.
Yeah.
We're actually kind of dry, but not enough to snow.
Yeah.
So.
Yeah. Well, that's good. That's not a bad thing.
Yes. That's right.
Yeah. So
welcome
everybody. It's what, another week or so before Christmas?
Oh my gosh. Don't even tell me.
Yeah.
Are you done with all that Christmas shopping and craziness?
No, I'll probably start in a couple of days, but no, I haven't done any of that.
It's all online, right? Online. Ordering stuff online.
Oh yeah, I got people's addresses and I'm just sending stuff via Amazon to them. Starbucks gift cards, that sort of thing.
Mm-hmm. Yes.
Yeah.
Forget the in-person shopping.
No. I do not have time to be attacking, little women over sales items. It's not happening. I always lose, so I'm not going to do it.
What can you do?
Yes.
Well, anyway, we don't have. I don't have market update today. and I like to get it on the day of our show so that it's current information.
Mm-hmm.
And we had Mr. Lennox Scott in the office this morning for our end of the year sales meeting.
Wow, nice.
So that was quite exciting to have him there. And everybody's wrapping up and gearing up to go for 2023. But today we're going to talk about a special topic,
Mm-hmm.
which a lot of people are curious about. Right, Tina? And,
Right.
you know, there are, should I keep going or
No, go ahead.
what do you
Yes,
think?
please.
Do you have
Mhm.
something
Go
else?
ahead. Mhm.
Okay. I wanted to say there are a lot of different reasons why people choose to move. One, they want to move closer to family. I have friends who are getting to be grandparent age and they want to be closer to where those grandbabies are going to be. Right.
Right.
People are downsizing because they're empty nesters and they don't need such a big home. They're, let's see what else. They want to, change in health status. Say, or, you know, marital status, say your husband or wife is ill. They need care, full-time care. So, you know, they got to go into assisted care living, and then, or one passes away and the other one doesn't want to handle, you know, the expense of keeping up a house. They need to move on. Mm-hmm. And yeah, 30% of people now are able to live in their home. 70%. Can you imagine? 70%. The statistics say people need to have healthcare, another assisted care place to move to. Mm-hmm. So those are the main reasons people are moving. And one of the options when you get to be 62 is the minimum age requirement. You can look into a reverse mortgage. Mm-hmm. So you have anything to add to that, Tina?
Yes. Well, before we get into the full details of a reverse mortgage, let me just tell you what a reverse mortgage is, because a lot of times people say, what is a reverse mortgage? And a lot of lenders, about 85% of the lenders out there do not offer reverse mortgages because it's a complete different animal. But right now it makes more sense. There are more baby boomers and more people of a senior age going into the community than ever before. And so just
people are living a lot longer.
They're
right?
living a lot. We just don't die off. These baby boomers, I don't know what we ate in the 50s or 60s. We just don't know how to die, okay? And they're going on and on and on. And
look at us.
We can't die.
We're in our 80s.
We look like we're 20. You know, we just won't go away. So it's more relevant right now. I mean, back in the day, if you remember, people used to, 65 years old was considered old. 72 years old, a lot of people passed away. And the average age for men, the average age for women in their 70s, actually, back in the day, 20, 30 years ago, you were considered old age. Nowadays, you see 75-year-old women tumbling off of second-story buildings, doing yoga down cartwheels down a staircase, and we're diving, we're skydiving, we're skiing. I don't know what the heck. We just won't go away. So it's very prevalent. A lot of people, they work until they're 65 years old. Some of them go for retirement at 67, 68 years old, 69. And they are still ready and able to go physically, mentally. They're in tip-top shape. And so what are we going to do? I mean, you take a retirement and you're going to make, probably less than you did before you retired. And there's just so far as much money as possible. So reverse mortgage is basically for somebody who is not at the beginning stages of their life. It's somebody who's at 62 or older that they have equity in their home and they just don't want to pay a mortgage anymore. They don't have to. They have equity in their home. So let me go ahead and define really quick what a reverse mortgage is. A reverse mortgage is like a traditional loan. It allows homeowners to borrow money using their own home as security for the loan. Also, like a traditional mortgage, when you take out a reverse mortgage loan, the title to your home remains in your name. However, unlike traditional mortgages, with a reverse mortgage loan, borrowers don't make monthly mortgage payments. Okay, so I'll say that again. They don't make monthly mortgage payments. Of course, they are obligated to pay the property taxes and insurance, but they don't pay mortgage insurance. The loan is repaid when the borrower no longer lives in the house, or at least the youngest borrower is actually leaves the house.
Their heir. Yeah.
Interest and fees are added to the loan balance each month, and the balance grows. With a reverse mortgage loan, homeowners are required to pay property taxes and homeowners insurance and use the property as their primary residence and keep the house in good condition. So,
there's a minimum, right, Tina? The minimum number of months you need to live in that house is how much? How many months?
I think it's per person, per age, so on and so forth. Yeah. So
like
I don't want to. Yeah, since the loan is so different, if we get to nitty gritty, then we have disclosures and all that fun stuff on the screen. So, so for me, since I mean, you can say whatever you want, but as far as a licensed loan rep, like they look at my stuff and they're like, "Are you licensed to say that?" But just in general, though, at 62 years old, if you got a reverse mortgage, it's going to be a different outlook than if you got the loan if you're 79 or 71. So the older you are in age, the better the rate is and the better the monthly payments are and so on and so forth. The better that you have. So when somebody is 62 years old and they have the exact same income and credit and so on and so forth, their loan is going to be quite different than somebody who is 72 years old. So reverse mortgage is an absolute different animal. But what it is good for, V, and I'll go ahead and go through on the other side of the break, I'm going to go through the mechanics of a reverse mortgage. But if you have somebody who is 64 years old, 65 years old, 68 years old, and maybe their spouse passed away, and they've got this mortgage they've been paying $4,000 a month on. Now they're retired and have half their income, but they have more than 50% equity in their house. Why should they be paying a mortgage? I mean, a reverse mortgage is very good. So what's going on is your interest that you accrue, you're not really making payments on the property, but the interest is making the balance go up this much. But the appreciation of the house is going up so much more per year. So the idea is at the end of the term, when you are, when you get rid of the loan or the loan is expired or what have you, that you're going to still have equity in the house. So the amount that you owe can never outweigh the property value or the equity in your home. So don't think that, hey, I built my loan balance up to $400,000. Yet my house is only worth $325,000. So I'm going to owe $400,000. So that's not the case. It's not the case. So I think the more people know about reverse mortgages, the more and more people are going to be able to use them. And for realtors, it's very exciting. If you have somebody you did a loan for when they were 45 years old, now their kids are moved out, now they're 65, they don't have to go look for another house. They can sell their house, take the equity, buy a new home with a reverse mortgage, and not have a monthly payment. And you'd be surprised if you have any people I get who are 67 years old, 64, 62 years old, and they want to put, $80,000 down a home and make monthly payments. And a reverse mortgage may be good for them. And you can buy with a reverse mortgage. It's not just for home equity. So how are we doing time as far as break?
Where are we? Oh, 2:40.
Okay.
We're still good. We got a couple minutes.
Okay, but Daniel wants us to mention the Rainier Avenue Radio's Holiday Bazaar that they're having in Columbia City at the Columbia City Theater, and that is on December 12th through the 16th from 5 p.m. to 10 p.m. and Saturday from 11 a.m. to 5 p.m. So you don't want to miss this holiday vendor bazaar extravaganza. Okay.
Yes.
So let's go ahead. Can we go ahead and go to break early so we can go ahead and just hit this reverse mortgage?
Tune in to Real Estate and Money every Tuesday afternoon from 2:30 to 3 here on Rainier Avenue Radio.world. Join your hosts Violeta Strash with John L. Scott Kent North and Tina Lombard with Guaranteed Rate Affinity. They'll help you navigate the waters of our volatile real estate market and offer you some guidance on how to make your hard-earned money work to make your dreams come true. Learn about current trends, get tips on financial matters, and have fun, interactive discussions about your home inside and out. That's Real Estate and Money.
Great. Okay, so let's get into it. So Daniel, I sent you some flyers via email. Did you get those? Awesome. There we go there. Now right here, V, and if anybody out there in TV land wants to get a copy of this information, I certainly would love to give it to you. It's a lot of information, and I don't expect anybody to take this and grasp it and know everything about reverse mortgages, but it's somewhat of a guideline to kind of wet your whistle, or so you have an outline to see if this is a good loan for you or your clients or a loved one. And first of all, see the advantages of a reverse mortgage. There are no monthly payment requirements. So of course you have to pay your taxes and you have to pay your insurance. And a lot of times those who are elderly or senior, they may qualify for a discounted rate on property taxes, but there are no monthly payments required. Okay, tax-free proceeds. So if you take out any proceeds for this, it may be tax-free as far as getting cash out. You get to stay in your home. So a lot of times somebody took out a loan when they were 40 or 30 years old, and now they can't afford those crazy payments of $3,000 a month or $4,000 a month. We may be able to do a reverse mortgage, and with the balance you have and with the equity that you have remaining, you can actually keep that home and not make a monthly payment like you were doing for so many years. Non-recourse insured by the FHA. So it is insured. It is a government loan. It's a government loan. So it's not some fly-by-night, circus act lender type of thing going on here. I mean, the government actually does oversee everything. And like I said, you're not going to end up owing more than the value of your house. That's the idea. Use the funds for almost any purpose. So you can actually take funds out. But the basic relief is your monthly release. If you were paying $3,000 a month in mortgage payments, now you have that $3,000 a month to pay for healthcare, to pay for daycare, to pay for medicine, or whatever other expenses you may have in your 60s, 70s, or 80s. Not all that income is going to be going towards a monthly payment on a mortgage. It can be going through what you need to use. Now here it shows the definition of non-recourse loans. Reverse mortgages are considered non-recourse loans. Neither you nor your heirs will ever owe more than the loan balance or the value of the property, whichever is less. So I'll say that again. You'll never owe more than the loan balance or the value of your property, whichever is less. No assets or other home equity will ever be required to repay the debt. Okay, so there's comfort there. In the past fee, a lot of times people were so scared of reverse mortgages because they thought that maybe their parents were going to owe more than the house and that the heirs would be left with debt. So that's not the case. Right. Okay. Mm-hmm. Here it talks about what happens to the family home. The right to remain in the home is contingent upon complying with loan terms. When the loan reaches maturity in the future, your heirs may choose to sell the home or to repay the loan. If the heirs choose to sell the home, they will inherit all the remaining equity after the reverse mortgage has been paid off. So if something should happen to you, if you pass away or you have to move, if your heirs can actually sell the house and they can get the profits themselves, the equity. So there's a myth out there that if you do a reverse mortgage, you have no ownership of the house. You basically signed your house away. And that is not the case. Okay. So how do you repay the loan and how much of it do you owe? So the loan must be paid off after the borrowers have moved out of their home for 12 months or longer, or the loan terms have been complied with. If the home is sold, the loan, including interest and fees, is repaid, and any remaining equity goes to the borrower and the borrower's estate or heirs. So just remember that if your parents do a reverse mortgage, or if you do a reverse mortgage, don't fear that your house is gone. You've just signed your house away, because that is not the case. What happens if the borrower dies? Yeah, go ahead.
I have a question backing up to see how people would get the funds for the reverse mortgage. How does that work? Say you've applied, it went through, then what? How do you get the money?
So there's a certain, we have to factor out what type of loan to value we want to have. So of course, with a reverse mortgage, there's got to be a lot of equity in the home for us to do that. So if you only have 10% equity in your home, we're not going to be able to do a loan. It's got to be 40 to sometimes 50% or more to have equity in that house. A lot of factors, dictate on what the loan to value is. But let's say that you owe $80,000 on a home, and let's say the house is worth $500,000, and you want to take out $100,000, and you take out a loan for $180,000. And so we would have a dictation on how much of the loan to value we want. So let's say the house is worth $500,000, and we want you to have 50% equity. So in other words, up to $250,000, we will lend on that house.
And how do you get that money?
We just give it to you at closing. We give it to you at closing, just like if you did a cash out refi.
What I had found out was that you get either a lump sum of cash, or you can open up a line of credit and go that route. Or they can give you monthly payments. However, one of those three options, or a combination of those three, right?
Yeah. Now, well, see, some people, they want to have monthly payments given to them from the equity of their house, and some people don't want any. They just don't want to have a mortgage. So what B is telling you is very viable. You have a choice of how the money is distributed. If that's what you're asking, how the money is distributed. Yes. You want a lump sum, you want monthly payments, how do you want that money? So that's something that you're able to dictate. Now, of course, with a traditional mortgage, we give you money and you pay us back. So with a reverse mortgage, remember everything is reverse. You know, you don't make a monthly payment or you get money back, so on and so forth. So there's all these little intricate facets to a reverse mortgage that you can actually choose. So it's very good that V is bringing this up, because depending on your situation or your parent's situation, whoever's doing the loan, you know, do you want to make monthly payments? Do you not want to have any payments? Do you want money distributed to you? How do you want that money distributed to you? Okay, this all has to do with how much money you make, what your expenses are, you know, what income you're making, your Social Security, your Medicare. Everybody is so different. So what V is talking about right here is you have got choices. You've got choices with a reverse mortgage, and it really fits around you.
Yeah, and it does not affect your Social Security or Medicare benefits, right?
Yeah. And people are so scared. You know, I get a lot of clients who say, it doesn't have to give it all away. Have to give away all my CDs and my mutual funds, all my stocks and bonds, because if I don't, I won't get Medicare. And I mean, there is a big fear there. And so a reverse mortgage is completely different. So each person is so different. So that certainly is something that is taken into consideration. Okay, so let's go on to now what happens if the borrower dies or leaves the home before receiving a full principal limit of the loan. So if you leave or move out of the home, any portion of the loan that hasn't been dispersed remains as home equity and becomes part of the buyer's assets or estate. And the mortgage becomes due, and the borrower or heirs are given time to sell the home. Heirs have the option to keep the home by paying off the loan or refinancing it. Otherwise, the home is sold, and the loan proceeds go first to paying off the reverse mortgage, and the remaining balance is going towards the borrower's or the borrower's heirs. So this is the thing right here. This is the case. I don't usually just get couples that come up and say, yeah, I want a reverse mortgage. I'm going to take out some money and I'm just going to, live footloose and fancy free. I usually get an adult kid that wants their parents to buy a house for them using a reverse mortgage, which is fraud.
Yeah, buy a house for them, for the kid.
It's something that people think that after you turn 50 or 55, you have no more brain and you're basically an open checkbook. You'd be surprised. So you have to be very diligent as a loan officer. A lot of times you have people who took out a reverse mortgage. Okay, they took out a reverse mortgage. A year or two later, they call you up from an assisted living facility or nursing facility, and they've moved out like 2 years ago. And you're like, well, what about the reverse mortgage? Well, my kid is living there and I don't want to sell the property. And I don't want to do all that. I want to make sure they have a place to live. That's also illegal. Okay. That's also something that we have to be very, very cognizant of. And you can't do that. You can't, this is not for your kid. If you want to help your grown adult child buy a house, and you want to co-sign or something, maybe your kid is going through a hard time right now. They don't have enough money to buy a house. You cannot use a reverse mortgage to fraudulently say, I'm going to live here, but then let your kid just move in, and that's where the mishap happens. What if something happens to you and you're unable to be, to comprehend things, or you're mentally, you're mentally not able to talk or what have you, or represent yourself well, and the kid takes advantage of you. That happens a lot. So you want to make sure reverse mortgage is for yourself, and it's not for somebody else to live in a house using your reverse mortgage abilities. Because if something should happen to you, should die or get disabilitated, or you move into a nursing home, that child is not going to be able to live there. And if they find out that you don't live there anymore, it's not going to be good. So this is something you want to talk about to the whole family. Usually when you buy a house and nobody has any say in it. But when you do have a reverse mortgage, and it is very advantageous for those who are seniors, you want to make sure that the whole family understands this is nothing to take advantage of. And a lot of times I try to tell my seniors who take out reverse mortgages that this is your financial privacy. You don't need to tell your kids what you're doing. So, if they have full capacity of what they're doing, which they should, you can't go around bragging to parents you don't have a monthly payment, because the next thing you know, you're going to be paying for their car payment. That happens more than not. So, and it's very true. And so reverse mortgages in and of themselves are a godsend. I've had a lot of people, they take out reverse mortgages and they're getting monthly payments, and it's helping them with their Social Security and their retirement, which is not enough to make ends meet. And they get the discount from the property taxes. they can actually buy a home. And more often it's used for people who have worked until they're 72 years old, and they bought this big, beautiful house with 5 bedrooms in it. And it's worth like 1.2 million. And they're like, listen, I just need a little condo down there by the beach, Cannon Beach or something. So they sell their house for 1.1 million. They only had a balance of $200,000 on it. They've got $800,000 cash. Now they want to move away from their kids. So they take out a reverse mortgage, and they see a condo for like maybe $300,000 or something. Okay. They put $150,000 down and they don't have the payment. That's what a reverse mortgage is for.
Yeah, that's great.
Okay?
That's a great option.
Yeah. Yeah. So, that's what it's for. It's not help me. I'm in financial distress. It's not that. It's a strategy. So realtors, if you're out there and you've got somebody who's like 65, 66, and they're still like doing cartwheels off the back of their deck, and they're just like, hey, I'm about to hit retirement. I'm making such and such a year, and blah, blah, blah. We're going, I'm out of here. Hey, why are you qualifying them for a $5,000 a month loan?
Yep.
They're selling their house. This is their 4th house. They're in Kirkland. They're like, hey, I just want to go buy something down there by Steilacoom, on the lake. And it's like $500,000. And I'm selling my house for $1.8 million. I just want to go down there and just live some fancy free. I don't really want to, I don't want to have payments. And, let me just take some money and put half down and just pay for property taxes and insurance. And that's it. And that's a very viable idea. So if you get somebody who is in their 60s and they want to, they're second and third time home buyers and they're buying down, you really need to bring up reverse mortgages. I'm a senior.
True.
If I'm a senior, you're a senior. We're both this fancy free. Okay. So we could basically, we're 62, 63. I'm like, peace out. I'm going to do reverse mortgage. You don't have to be, it's funny because I've got these flyers. I don't know, Daniel, can you show the next flyer that I have there? It's the Let Your Golden Years flyer. Where's that at? It's another flyer I gave you. But you see, you've got people here, they're gray hair, but they're walking around. But really, the people I know, especially the Panais that I know, they still are like 80 years old. They're jumping around, they're in choirs, they're hiking, they're going to Muckleshoot. I mean, they're living life. They're going to Paris, they're doing their stuff. So it's not just about it's not just about you're older or you want to get this senior citizen loan. It is not that at all. It is a way for us to actually embrace what we've done in our past years and actually do something more productive with our finances. So let me see here. Let me take this.
Especially people are postponing retirement till much later, right? I say I'm going to be in real estate until I fall over.
Right.
My 80s, 90s, whatever.
Yes. So people really, let me see. Let me read off something for you really quick here. These are reverse mortgages on 10 reasons to consider. Okay. First, you can enhance your retirement and quality of life. So you're not burdened every month with these crazy payments. You can actually go to Paris. You can actually go hiking. You can actually take some time off and use your funds for more quality of life, things you want to do as opposed to being drained or sapped by a mortgage payment. Refinance your mortgage into a payment option, reverse mortgage. So you can actually take a payment as an option. Let me see here. Purchase a retirement home, investment property, upsize or downsize. Use proceeds for nursing home costs, healthcare, or other expenses. Credit line growth. The amount you can borrow will increase over time. Reverse mortgage bridges the Medicare gap from age 62 to 65. Donating to charitable organizations or gifting to the family, which you can do. You can possibly use reverse mortgage to increase your network to pass on to the next generation of your family. And you may be able to assist with tax management. So there's a lot of things to consider here, V. So when I say reverse mortgage, if you're a realtor out there, or if you're and you've got clients who are elderly, don't say, "Oh my gosh, you're 70 years old. There's no way you're going to take out a 30-year mortgage. You'll be 100 years old. Are you really going to make it?" You'd be surprised how many people tell me that garbage.
Yeah.
And you got people running around like they look like Cher. And I'm like, listen, I'm going to buy a condo down at the river. Or I'm going to go buy, I'm going to buy something, in Florida, and they're, I'm in Phoenix or Scottsdale, and they're doing their thing, So if somebody's in that age category and they're on their second or third home, they got a lot of equity. Don't just say, I'm going to sell their home and then we're going to go buy something else and get them to a lender or get another mortgage. No, we paid our dues. V, we have paid our dues. Okay. Yep. it's time for us to relax and check out a reverse mortgage where we don't have to have that payment.
So best thing to do after you talk to an agent who's smart enough to tell you that that's a good option, call Tina. She knows all the stuff.
Okay.
Reverse mortgages. Okay. Great way to go. Mm-hmm. So I think that's time.
That's it.
Thank you all for watching us today. And I'm Violeta Strash from John L. Scott.
And I am Tina Lombard with Bank of England.
We'll see you next Tuesday at 2:30. Thank you. Bye-bye.
Bye.
You've been listening to Real Estate and Money with your hosts, Violeta Strash and Tina Lombard. For more information, call 206-717-4490. That's 206-717-4490. Go to the Rainier Avenue Radio.world website to find the Real Estate and Money schedule, or tune in to our live show every Tuesday afternoon from 2:30 to 3. We will help you find your dream home.